Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD sold off across the board on Friday following a softer than expected NFP report. Overall, the data wasn't as bad as one might think by just looking at the reaction, but given that we were positioned for a strong report and the pricing got more hawkish after the Fed's decision, the weaker data was enough to trigger a quick repricing. In fact, the market is now pricing 59 bps of easing by year-end, compared to just 35 bps before the NFP release. That's a pretty quick change of heart. Over the weekend, we had Fed's Williams opening the door for a cut in September, and yesterday Fed's Daily echoed such sentiment. The NFP clearly made them a bit more worried, and a September cut is now basically a done deal. It's highly likely that more benign data will see Fed Chair Powell opening the door for a cut in September at the Jackson Hole Symposium. On the JPY side, we haven't got anything new since the BOJ left interest rates unchanged and revised inflation forecasts higher as expected at the last meeting. The yen, after some depreciation caused by dovish Governor Ueda's comments, rallied strongly on the back of the soft NFP report and the dovish repricing for the Fed. For more JPY appreciation, we will need weak US data to increase the dovish bets on the Fed, or higher inflation figures for Japan to price in more rate hikes than currently expected. Other potential positive driver could be signs of more fiscal support, as that will likely put upward pressure on inflation. Now on the daily chart, we can see that USD JPY eventually sold off from the key resistance around the 151 handle. The target for the sellers should be this major trend line around the 144.50 level. That's where we can expect the buyers to step in with a fine risk below the trend line to position for a rally back into the resistance. On the 4-hour chart, we can see that the price is trading just below this upward trend line that was defining the bullish momentum on this time frame. We can expect the sellers to pile in around these levels with a defined risk above the trend line to keep pushing into the 145.86 level here. The buyers, on the other hand, will want to see the price rising back above the trend line to invalidate the bearish setup and target a move back into the resistance. On the 1-hour chart, we can see that we could have a minor resistance here around this most recent swing high at 148 handle. If the price gets there, we can expect the sellers to lean on it with a defined risk above it to position for a drop into the 145.86 level next. The buyers, on the other hand, will look for a break higher to increase the bullish bets into the 151 resistance. These red lines define the average daily range for today. For the upcoming catalysts, today we have the US ISM Services PMI, and on Thursday we get the latest US jobless claims figures.